Hello everyone, we are from Group 2, consists of me, Tessa Laurencia, Chris Ansawanadi, and Rizkawati. The topic of our presentation today is about the basic concept of income tax Article 21. Let me begin my presentation by presenting about the definition of income tax Article 21. Income tax Article 21 is a withholding tax imposed on income received by a domestic individual taxpayer for work, services, or activities they perform. Then, who are the subject of income tax Article 21? They consist of employees, recipients of severance payment, pension security, all act protection, including their heirs, are also subject of income tax Article 21 taxpayer. And then non-employee income tax Article 21 taxpayer who receive their income from services like doctors, accountants, athletes, singers, actors, actresses, etc. Then there is member of the board commissioners or the supervisory board. Then former employees and also participants who receive their income from their participation in an activity like competition, meeting, conference, training, participants, etc. So that's all about the definition and subject of Income Tax Article 21.
Okay, hello guys. Here is Ka, and how are you? How are things with you? I hope you're still out there, okay? And Tessa already explained her matter, and come my turn. Here I'm gonna explain to you about Article 21 income tax. What Article 21 income tax consists of? It's about the object and rights. But before we jump into the what is object and rights in Article 21, we should know what is Article 21 itself. Okay, employers are required to withhold Article 21 income tax from the salary payable to their employees and pay the tax to the state treasury on their behalf. The same withholding tax is applicable to other payment to non-employed individuals. Okay, so here clearly say that if a company, example X company, I mean all of the company have their employees, right? And at the end of the month, company need to pay the salary to be recompense to their employee, and the company need to withhold some of their salary, and it is to be actually it is the obligated by the employee, but company need to withhold it and then pay the tax to the state treasury on their behalf. Okay, for the object of Article 21 income tax or PPh 2021 is the object of income tax. Article 21 consists of income related to work, service, or activity under the named and in whatever form that the PPh 21 taxpayer receive or accept. So anyone get a salary from their work, service, or other activity that is that is their salary, they need to pay tax PPh 21. Okay, let's continue to my next slide. Okay, here I'm gonna show you actually clearly about the object of income tax. Article 21, also the forms or the example of, to make sure you can post this video and read by yourself to make you more understand. If I just read it, you may just easy to forget, but if you post this and read by yourself, I think you are smart enough to understand, because this is already uh too clear actually. Third slide. Here I'm already show you the tax rate in Article 21. It start from the range of the income. The first is annual income up to 50 million rupiahs. You will obligated tax rate about 5%, and annual income above 50 million to 250 million, you will got about 15%, and annual income above 250 million to 500 million, you will obligated to pay the tax about 25%, and the last is annual income above 500 million, you will got or have to pay the income tax about 30%. So if your income is greater, so your tax rate also be greater. It's, I mean, like similar. It will not, you will not obligated too much if you have more income, right? I mean, this is more clearly, but resident individual taxpayer without a taxpayer identification number are subjected to a charge of 20% in additional to standard withholding tax. Means we know every taxpayer have their NPWP or nomor pokok wajib pajak, and if someone need to pay the tax, but he or she not have in the NPWP, that will be a charge 20% more than the one who have NPWP. And for the next slide, I'm gonna show you the example. Okay, here we go, guys, with my next slide. Here I'm gonna explain to you about calculating the income with the rate based on Article 21, which I have explained before. There are 5 rates. It is 5%, 15%, 25%, and 3% based on the income. And in my example, taxable income is 75 million, and there are ways in my slide how to calculate it with NPWP or and without NPWP. Both with NPWP or without NPWP, we have to divide it first. The income based on the rate. The first is, because my example is 75, first is for 50 million, and the left 25 million. Okay, the first 50 million we have to multiple by 5%, and we got 2,500,000 rupiah, and the left amount 25 a million multiple by 15%, and we got 3,750,000. We submit or we calculate it, we got 9,250,000 rupiahs. That is with NPWP. And how the case without NPWP? Without NPWP, I've already mentioned to you before that if someone have obligated to pay the tax, but he or she there is not have NPWP, they will charge 20% higher than the one who have NPWP. Okay, jumping to the example from 75 million rupiahs. The first we divided it 50% multiple by 5% multiple by 120%, we got 3 million. And then the left amount 25 per million divided by 15 divided, I mean multiple by 50%, 15% multiplied by 120%, and we got 4,500,000 rupiahs, and the total is 7,500,000 rupiahs. And if we compare without NPWP, is higher about 1,250,000 rupiahs. It's higher, right? So I just want to make sure if you already get a job after we graduate, do directly make your NPWP, so you will not charge higher to your income, and it would be effective and beneficial to you. So thank you guys already see my presentation. Hopefully you understand, and but if still they are you understand about this matter or any inquiries, just ask us, make us known in our class later. Okay, thank you.
PTKP, known as penghasilan tidak kena pajak, is a regulation that regulates whether someone is obligated to pay taxes or not, based on one's income. There are three categories of PTKP. The first one is not married. It is applied for those who's not married yet. And then the second is the married categories, where it is applied for those who's married and only one person between them that having income or earnings. And then the third one is married and both of them has earning and being combined. And here is the table about the distribution related to the categories.